Money FM 89.3, the best of the afternoon update. Viewpoint.
Money FM 89.3. Happy Friday. It's Lynn Lee with you this afternoon. Now, from a prolonged property downturn to a local government funding crisis and a sluggish labor market, China's economy has struggled for momentum in 2024. Many people are concerned because what happens to the world economy and global geopolitics in 2025 will depend significantly on China, the world's largest exporter and second largest consumer market. While China has emphasized the need to maintain steady growth, keep employment stable and increase incomes, challenges remain, such as business confidence and headwinds in the property sector. So how will China tackle these obstacles? What will it take to revive the struggling Chinese economy? What's in store for China's economy in 2025? Joining me now to share his insights and give us a sense of what to expect in the new year, where China's economy is concerned, is Gary Ng, Senior Economist for Asia Pacific at global financial institution Natixis. Gary, good to have you with us.
Hello, hi. It's great to be here again.
Now, Gary, China's economy is facing some of its most challenging circumstances in decades. Economic activity has slowed well below the historical trend, raising doubt that Beijing will hit its target of approximately 5% growth in 2024. Youth unemployment is rising. We're seeing it at around 17%. And then there's household spending as well, which is far below the global average at about 40% of GDP. You're based in Hong Kong, and this being your area of expertise, what's your take on the current state of China's economy?
Well, I think indeed there is still this lingering problem of the confidence, right? Because if you think Chinese consumers and corporates, they are actually transiting from the very high growth environment, which could be, 5 years ago, towards right now that there are tighter regulations and basically changes structurally in the economy. So basically it's a situation that income may not as growing as much as before. It's not as easy to make money right now, and there's greater divergence within the economy. So I think this is like the reality that the society needs to think about. And with that, I think the biggest problem that I see right now is really this deflationary pressure that the competition is getting tougher. A lot of policies has been focusing on supply. There's simply not enough demand to absorb everything. So I think this will be the number one priority that the government will need to fix. And this will be my biggest problem that I can actually see in the Chinese economy right now.
Now, you talk about deflation. I was just about to ask you that. Despite all this doom and gloom sort of news that we've been hearing a lot of these days about China, some observers are saying these less than positive assessments are particularly inaccurate. I read a report saying much of the analysis of China's economy is not evidence-based, citing instances such as international policymakers being inclined to fixate on consumption, which is low in China, and questioning the assumption that deflation causes economic downturns rather than just being a symptom of them. Because in the case of China, deflation and economic stagnation could be caused by other issues, such as rapid population aging. So what do you make of that?
Well, I think it's a mix of both. It's really hard to use one single factor to explain everything. And of course, deflation is definitely like a symptom that basically shows this weak demand that we see in the economy right now. But of course, having said that, it doesn't mean everything is negative, right? Because if we look at the price data, the core CPI that we exclude food and energy, if you look at services, actually those items are still positive, even though it's not growing as quickly as, people may have expected. So the biggest problem right now, beyond services, is really on the manufacturing goods that the competition is getting tougher. Consumers are not that willing to buy all this automobile or even about the furniture because the real estate sector is not doing well. So I think this divergence kind of point to this general weak demand that we see in the economy. And of course, aging population, a lower job security, lower income growth, lower wealth effect. I think all of these factors part of this weak confidence problem. So yeah, it's not only about deflation.
Okay, we're talking about the slow Chinese economic growth, and also everyone's talking about the possibility of a global trade conflict under U.S. President-elect Donald Trump. Are those some of the main factors that you think will shape China's economy in 2025?
Oh, yes. I think this is indeed a big difference versus last year that China can use the cyclical momentum in export, especially in some of the items like electric vehicles, steel, and etc., to mitigate some of the domestic weakness. But in 2025, this tailwind will not be as strong as before because of all these geopolitical tensions. And it's not only about Trump, right? Because if you look at the concern, we also see a broad concern coming from Europe, generally the West, then even the global South in some of the South American countries, they're worried about this influx of China's export because of a much cheaper price, because of the inflation divergence that we see over the past few years after COVID. So this is indeed a global concern that I do think is hard for China to only rely on export. So 2025 will be about domestic demand. This is why we start to see early this year, right? There are basically stronger trade-in programs trying to encourage consumers to spend more with subsidies. There are basically more support to companies, helping them to upgrade the equipment. All of these policies are pretty much demand-driven, which is quite different from last year.
Okay, let's talk more about this trade tensions. How do you think the ongoing trade war with the U.S. will impact China's economy in 2025?
Well, I do think it will not be positive for sure because China has been benefiting from the international trade for many years, right? And some of the recent restrictions, even before Trump comes into power, is this stronger approach from the current President Biden in the AI restriction. There could be more investment restriction to China in terms of different sort of technology. I think all of these policies will simply be carried over towards the Trump era and possibly with even more tariffs. So for China, it will mean that it will lose more access to the foreign technology. The export may be contained a bit more. So it's hard to really put a single figure about the exact impact because we're not so sure about the percentage of the tariff. But definitely it is not a positive story. But of course, we will see China trying to basically inject more liquidity. There could be more fiscal stimulus trying to help to climb up the tech ladder, but it will take time. So definitely it will be challenging that could hurt China's electronics export.
I think it's not just China. I think the rest of Asia are also terrified, What strategies do you think China will employ to counteract the negative effects of tariffs?
Well, I think the number one thing the government may do is to support the domestic R&D and try to use the domestic market to support the R&D of the firms as well. Mm-hmm. So basically it will be a more domestic substitution story in asking more local firms, state-owned companies, or even the government in terms of using the products developed by the domestic companies. And second, when we look externally from China, it's possible that China will try to diversify more away from the traditional U.S. market into other countries. Then this could be a double-edged sword because for these countries, they could face more cheap import from China. But on the other hand, if some of this country actually decide that, okay, we're going to make a deal with China, we're going to put some tariff unless Chinese firms invest in our land. I think this is also a possible scenario, which is quite clear in the electric vehicle and the battery sector. So generally speaking, China will try to boost domestic demand through this way and try to diversify from the U.S.
Okay, let's talk about property. How do you see the property sector evolving in 2025 for China?
Well, we can look at the home market from a different perspective. And first, when we look at transaction after many rounds of relaxation in policies, indeed, we finally see some improvement in the home market in basically more households willing to buy houses. But the problem is also about this major improvement is mainly concentrated in tier 1 cities like Shanghai, Beijing, etc. So I think in short, it means there's some improvement, but there will need to be stronger measures, lower interest rate to actually encourage households to buy homes more. And therefore, I think in terms of home prices, it's hard to see it recovering in a very, very rapid way because of this looming supply and all this inventory that developers need to sell. And if we take it to the next level, it will also mean that property investment, which is pretty much a long longer-term indicator and also show the confidence of developers in terms of the future outlook, it's hard to have a very strong pickup in 2025. So it will be a year of stabilization in transaction, but it will take more time to see a full recovery.
Gary, recently the Chinese government has rolled out some stimulus measures to support the economy. Can you elaborate on how these measures might be doing that in 2025?
Well, so far we have seen a change of tone on the top government level in switching towards a more demand-focused approach. But in terms of implementation, things are going a bit slow. I think this is why the market is also a bit disappointed. So in 2025, it's quite likely that China will need to lower interest rate further, because if you look at the inflation data right now, the current rate in China is simply disproportional to where it should be. Of course, it will try to balance the pressure from the yuan, from the external yield divergence, etc. But however, China sees the room of cutting 50 basis point in interest rate and 100 basis point in the reserve requirement ratio. On the fiscal side, it's possible to see stronger infrastructure investment, especially on the central government level. And then we will see more of these trade-in programs being expanded and rolled out in terms of the consumer goods and business usage equipment. But however, one point that I would like to make is that the current stance, it seems to me that is still too conservative. There's too much restriction in terms of how people can actually get these subsidies. They will need to relax it further.
You know, the World Bank recently raised China's economic growth forecast for 2024 and 2025. So do you think China will be able to achieve its growth targets?
It really depends on what is the growth target and what is the government stance. Because if the government wants to really engineer a very, very sharp economic recovery, they can issue more fiscal policies with bonds. And basically, there's ways to do it in the short run. But of course, that will come at a cost of government debt. But what we see so far is that the Chinese leadership has pretty much accepted that growth should or will gradually decelerate. So as long as it's maintained in a range that they are comfortable, then this doesn't seem to me that it has changed the policy goal from stabilization to like a massive bazooka in terms of the policy. So this is something that, hasn't really changed in 2024. It also not likely to change in 2025 unless there's a very, very strong economic pressure pushing them to do so. So right now, we expect China to grow at 4.8% in 2024 and a deceleration to 4.5% in 2025, which is pretty much the range that policymakers will accept.
Something that we haven't talked about is technology, and I think it featured in President Xi's speech recently as well. So what role do you see technological innovation playing in China's economic future?
Well, China is trying to transit itself from a very labor or capital-intensive economy towards a more innovative, and which is also called like a high-quality or sustainable growth on official terms type of economy. But however, I do think that even though this change is positive, whether it can create the same amount of jobs that can actually, be generated in the past, that is also a big question, right? So, of course, it seems important on a security basis that the Chinese government will continue to do so. They will have some positive impact in contributing to a larger share of a Chinese growth, but it's quite hard to imagine that part can completely offset the traditional sectors like steel or real estate or some of the other automobile, etc., to provide the same degree of employment. So I think this is why at a certain point there may be some restrictions in how far China can push towards that sense. But of course, think of the aging population, think of the higher production cost compared to the past. It makes sense to push the tech agenda a bit further.
I'm going to talk about something that might be quite unpopular, I suppose. We don't want such things to happen, but how might potential military conflicts impact China's economy in 2025?
Well, I do think the short-term risk of big military conflict seems to me to be quite low. It's simply because, of course, I'm sure China have looked at the Russia case, and then when you look at that case, it basically shows that it's not that easy to have everything under control and etc. And right now, we see China's growth decelerating, but it also not getting towards a level of like a blink of collapse and everything. Because we still see some stabilization trend in many sectors. So I simply do not think there's a very strong incentive, basically an advantage for China to basically act in a way that would be quite different from before. So I would say that such risk is not that high to me in 2025.
Gary, it's always a pleasure listening to your insights. Thank you so much. It's been a fascinating discussion. Do you have any final thoughts on China's economy in the new year?
Well, I would say it's a very challenging year, and then investor would look at China in a different way, and then there will still be opportunities, but it will be very selective opportunities.
All right. Thank you very much, Gary. Gary Ng, the Senior Economist for Asia Pacific at Global Financial Institution, Natixis.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.